Yeah, so honestly, I think it was sort of growing in the career and realizing the real estate has always been a bit of a passion and wanting to learn more and taking additional courses and just figuring out how else, and sort of what other avenues were there in real estate that I could take advantage of. And so ended up taking a course that was led by a couple other physicians into sort of multifamily investing, how to add value to properties and things of that nature, looking at short-term rentals. I ended up doing a couple of Airbnbs. I would 1031 sort of out of my long-term rentals into short-term rentals, and was able to get really nice sort of tax benefits from being able to do that. And the cash flow was significantly higher than it was in the long-term rentals. And
welcome back to the Massive Passive Cash Flow Podcast. I'm Gary Wilson, your host, and I'm so glad to have you back listening to the show or watching if that's the case. We've got an excellent guest today, Chirag Chaudhari. Is that correct?
Mm-hmm.
Chaudhari? Yeah, Chaudhari. Okay. And thank you, Chirag, for being here. You guys definitely pay attention to this. If you're driving, just keep driving. If you want to, you can come on and get the show notes when this is published. So just look for that. You can get the show notes from us then. If you are sitting down, this is one I highly recommend you take some notes on. So really interesting background here, and you're going to love the show. So first off, Chirag, thank you for being here. I really appreciate it. I know you're busy because I understand your primary vocation and what you're doing here. We're trying to probably keep you really busy.
Yeah, no, appreciate that, Gary. Thanks for having me. Really excited.
I'm glad to do it. So, yeah, let's start at the beginning. First thing is geographically, where are you located?
So been on the East Coast for the last 25 years now. I'm out in Maryland, maybe 20 minutes outside of Baltimore, and then sort of grew up, born and raised out in Chicago, the northwest suburbs.
Gotcha. Yeah, well, I used to live in Baltimore. In fact, I lived in Baltimore right across the, Loch Raven Boulevard for Morgan State College when I was a kid.
That was great.
And then we moved to Columbia. We were one of the first families in Columbia when it was a model city,
Yeah.
many years ago. And my oldest sister in her husband, he was at Johns Hopkins all the way through freshman year, day one, all the way through internship and residency. And they lived in Timonium for a while. So great investment area.
Yeah.
Maryland, people don't realize it's a great place to invest. So in any case, speaking of investing, take us to the kind of the beginning. I understand, you're an MD, and what was it? Or are you still practicing? And what got you into investing? What was that transition like?
Yeah, so match day just passed here in March, and so that's always very exciting. And so I found out I was matching in Maryland and going to be going to the University of Maryland for my emergency medicine residency. And
Nice.
we knew we wanted to have a family at that point, and had just gotten married, and so we were one of the only residents who decided to not live in the city. We actually lived in Owings Mills, just outside the city. Bought a small little townhome there that we were going to start our family in, and we ended up living there 4 years. So through residency, luckily was able to secure a position locally, part of the University of Maryland network, and so commuted for a year. But when we sold that townhome at that 4 year mark, I made more than I did 3 years as a resident physician. Now, granted, that's 20 plus years ago, and residents do a little bit better now than they used to. But
Yeah.
to have a home and to be able to make more money from 3 years of sort of hard labor, if you will, was pretty eye opening for me.
Yeah. So that property, was it a multifamily or was it a single family or a townhome or?
Yeah, no, it was a 4 floor sort of walk up single family, just townhome.
Mhm.
But we sold at sort of the peak of the market. We got lucky in that regard.
Yeah. Yep. Market timing is everything. But the funny thing is, though, is we're always taught, don't try to take the market. But if you manage to buy at the right time and sell at the right time, it can make a huge difference.
Mhm.
So, well, take us forward from there. So you were practicing for a while, and then did you keep investing right from the beginning, or did you time off and realize later on, gee, I wish I'd have kept investing? What was that decision process like? Yeah.
Yeah, so honestly, it was we were a little bit market averse. We wanted to do right and put max out our retirement accounts and do all that. But anything that we had that was a little bit above and beyond, as opposed to throwing it additionally into the market, we sort of saved up until we had enough for a down payment for a home, and we bought a house. And probably within 10 years of sort of being out of residency, we we had 4 or 5 homes, in addition to ours that we were then that was going to be the retirement plan and sort of live off that cash flow. And, we had using OPM, if you will, other people's money, being able to sort of pay down our homes by, them paying the rent and us sort of, just paying the mortgage with that and having a little bit of cash flow on top was the plan. And I worked a lot when, we had young children again when I first started. And so we wanted to be sort of hands-off landlords as much as we could. And so we bought model homes from a
Mhm.
nationwide home builder. And so they were our tenants, for 2 to 3 years, sometimes at a time, until they could sell out their entire community. And so we never really had tenants. We didn't have to bother with that. And, they would just monthly deposit, the rent, which was above market, directly into our checking account. So it worked out really well and
Wow.
allowed us to be, sort of hands off.
Yeah, that's a huge advantage. Yep. It's interesting that I didn't even know that was possible. So now in the early days, were you buying traditionally, like you would put down 20% financial arrest and then you would rent it out, the cash flow would cover your costs, and that's how I got started too.
Yep.
When did you, when was it when that you started changing your strategy? And did you have your eyes set on like syndication, or is it more just, hey, I'm going to bring in a couple of friends that I know and just have them participate, or a colleague perhaps? What was that next step like? Mm.
Yeah, so honestly, I think it was sort of growing in the career and realizing the real estate has always been a bit of a passion and wanting to learn more and taking additional courses and just figuring out how else, and sort of what other avenues were there in real estate that I could take advantage of. And so ended up taking a course that was led by a couple other physicians into sort of multifamily investing, how to add value to properties and things of that nature, looking at short-term rentals. And so I ended up doing a couple of Airbnbs. I would 1031 sort of out of my long-term rentals into short-term rentals, and was able to get really nice sort of tax benefits from being able to do that. And the cash flow was significantly higher than it was in the long-term rentals. And so did that, but that comes with a lot of active work and effort. And so,
Mhm.
to your point, how else can we do this without sort of a lot of the hands-on effort, if you will? And so that's when I started learning about passive investing and syndications, and took another course to sort of, I wanted to be able to know what I was talking about, know how to sort of vet a sponsor and vet a deal and do those things, intelligently. And so after that, really jumped into a lot of passive opportunities. So my wife and I are in 25 of them now.
Okay.
And then just, talking to friends, they would see sort of what I was doing and some of the sort of passive income that was coming in and wanted to do the same. And so I would tell them, here are the things that I'm looking at, here are the things that I'm investing in. They would come along. And then, kind of grassroots, there was more and more of that. We said, hey, if we're coming in with significant amount of, capital, we should talk to the sponsors and the folks running these deals and say, let's make the terms a little bit better for all of us because we're coming in
Mhm.
with larger amounts. And so that's what we're doing now, sort of at scale.
Okay. Interesting. So, the properties you're looking at now, in the beginning, I'm sure there were, like you said, the four floor townhome, and then would you gradually add, buy more units per purchase? I mean, kind of where are you now? Is there like a model that you're looking at? Hey, it's got to be 20 units or 20 to 30 units, that type of thing, or where are you now in that regard?
Yeah, so we're I think now when it comes to the passive side of things, we're really asset class agnostic, and it's really sort of geographic agnostic. We're just about the deal, and really about the sponsor. So it's been folks that, my wife and I personally have invested in, have done well, have a great track record. We've had a good experience so far, and then we want to sort of bring that in as we continue to do more of them. Bring others into those opportunities. And so we've done ground up construction, we've done commercial, we've done multifamily, hotel to multifamily conversions, land, we've done a debt deal, and oil and gas. And so a lot of different asset classes, because I think many of our investors are dentists and physicians and attorneys and folks who don't have a lot of time to do the vetting of these deals and doing the deep dive, but want their money to work for them and not sort of work for their money as much as they have to. And
Yeah,
so, sort of having a robust kind of diversified portfolio when it comes to these syndications is really helpful because they're not sort of market correlated. And none of the asset classes a lot of times are correlated necessarily to even each other. And so it's,
Mhm.
we find it pretty healthy to have them in a variety of asset classes. Some want tax benefits, some want, monthly mailbox money if you want, if you will. And so it really depends on what the investor is looking for. And there's usually an asset class that fits their need.
Okay. Okay. So, let's talk about the asset classes. Obviously there's multifamily, um, storage, strip mall, office space, and we've seen a lot of conversions. I mean, with the pandemic years, it really generated a lot of creativity when it came to real estate and how can they repurpose properties that, because we all knew. I mean, I'm in the business, and I remember when I first quote unquote got rid of my first office was 2009. We had no idea about anything about a pandemic, but until that was something that happened for our grandparents when they were children. The 1918 time frame. But the recession was hitting, and we were just trying to keep cost to minimum. I had launched a brokerage January of 2008, right at the beginning of the recession, and people thought I was nuts. And I said, well, I'm actually not going to do the franchise model. I'm not even going to follow the franchise model. I said, we're not even going to have an office space for people. We're going to have my property management business, my title business, and my brokerage. Put the brokerage on the top floor because it was literally my receptionist and me. We had a conference room for closings, another conference room for if we had to have another meeting. And I told the agents, I said, I had 50 agents. And I said, you can come by here all you want. Come to closings, make copies, do printing, whatever. We'll go grab lunch together. But you are not going to have a cube here because this is not where you make money. In real estate, and if you're an agent, you make money out there with the investors. And I told him, I said, I can guarantee you, investors could care less if you have a mahogany desk and marble floors and brass stuff. They don't care about that. They don't even want to know where your office is. They want you to go to where they are, meet them at the properties, meet them at their place of business. So we grew sixfold in the first 3 years of the recession. We did over 5,000 transactions. A lot of 3,000 were REOs because we already had the investors. So the
Yeah,
banks and the asset managers were calling us. We didn't call them. But in
no,
any
great.
case, what I'm getting at is I knew instinctively that office space was just a industrial age, mindset. If you hire the right people, you don't need them to manage them every second of every day. These are entrepreneurs. They're independent contractors. If they're going to make it, they're going to make it because they're going to make it, not because you made them make it. If they want to make money, by golly, they're going to follow instructions to get out there and hustle. So in any case, with the pandemic, I'm thinking to myself, man, this is going to be a huge opportunity. So we were watching some really neat conversions, like condo offices. These guys have put gyms in the basement floor, convert the rooftop to a patio, and the middle three floors were, rentable cubes you can rent by the hour, by the day, by the week. We'd have a kitchen and a living room, stuff like that. It went really, really well. So what I'm trying to ramble here, but talk about some of the asset classes that have done well for you, whether it's office, retail, multifamily, or what are the ones that you think, um, in hindsight, were the top three or something like that? Mm.
Yeah, no, I think it's great. I think, yeah, you're ahead of your time clearly, and kudos to your success. I think you're right. I think sort of like the gold rush, the folks that really did well were the people that were in the supply chain, right? The folks who were selling the picks and the axes and the
Mhm.
pans and all those kind of things. And so we find ourselves in a similar position with some of the asset classes. For example, land. That's done tremendously well for us. It's all in Arizona. A lot of it is, changing zoning from sort of residential to commercial in areas where data centers are going up and potentially where a data center could build on, bringing energy, bringing infrastructure, roads and things like that to those areas. And in areas that are growing where airports are expanding and there's, a lot of trade happening. And very adjacent to California that is maybe less business friendly. Arizona offers significant tax breaks to businesses and things like that. There's a lot of
Mhm.
chip manufacturers coming there. And so land has done really, really well, where there's no sort of vertical construction on the land. It's a purchase in cash. And so very low risk in that sense because there's no leverage, there's no financing. We buy the parcels in cash and then hold them, rezone and sell. And so it's a fairly simple business model, but it leads to 3 to 5x equity multiples typically on
Mhm.
invested dollars. And the average is 2 to 5 years, so they're relatively short holds for pretty high
Nice.
multiples. Those have done really well. My wife and I invested in a triple net lease that was supposed to be a 4 year project that ended up doing really well in 2 years and 3 months. We were able to get essentially almost close to double our investment back very quickly. And you don't sort of hear of those opportunities, but a lot of that's the due diligence and the vetting and sort of location is important. This was just outside of Orlando, and that did really well. So we want to do several more of those.
Hmm.
But there's other asset classes that are all very promising, and we have yet, thankfully, knock on wood, yet to lose any investor capital into opportunities that we've placed investor capital into, which is
Hmm.
great. Not to say it's not going to happen. I think one would be foolish to think that would never happen, but we've had a very successful track record to date so far.
Nice. Yeah, I appreciate that too, by the way. Another thing that seems to be up and coming, and it's already in play, but they're the getting the right credentials to build the tiny homes. It's still like case by case, builder by builder. There's not a lot of uniformity there between the states, but we're seeing them pop up in more and more locations, and not just in the South. I mean, one of the best locations I saw was actually in Florida, down by Naples. As a student of mine, got she and her husband bought 20 acres and got it easily rezoned to have 108 beds. And it's just the zoning, but what it amounted to was, about almost 20, I'm sorry, almost 50 tiny homes. These are like 350 square feet little places, but they're leveraging the outdoor space as their part of their living space.
Hmm.
They're sleeping indoors and bathing indoors and cooking indoors. But really, when they're settled sitting in a living room, they're going to sit out on the deck. They just capitalize on that phenomenon. And it was people that were like in their 60s. They didn't want to cut grass anymore. They didn't want to fix things. They just want to travel and have fun, and they don't want a lot of overhead. But they want to be in a nice neighborhood, and that was the answer. So now we're seeing that around the country. But um, what other states you mentioned? Arizona and Florida. Are there any other states or regions that seem to perform better for you than others?
Hey there, did you know you can join a free real estate mastermind session every Monday night? It's called Monday Night Live and it kicks off at 7 p.m. Eastern. I'm Gary Wilson, and every week I host this live class, joined by investor agents from across the country and around the world. And here's the best part: no selling, no recruiting, just pure, actionable real estate education. Every Monday, we cover everything from the basics to advanced strategies. We even bring in expert guests once or twice a month. Topics like how to buy property using crypto, how AI is reshaping the real estate landscape, what the metaverse and blockchain mean for real estate deals today. Whether you're a new investor or a seasoned pro, you'll walk away with real value, and you'll have the chance to ask questions live, connect with others, and expand your network. Sound good? Then head over to realestatewithgarywilson.com. Click the Resources tab, select Monday Night Live, and you'll find recent replays plus a full schedule. You can register for any upcoming session, even weeks in advance. And if you're watching this on social media, just check the video description for the direct registration link. I'll see you Monday night. Bring your questions, your notepad, and your drive to grow. I look forward to connecting with you.
Yeah, I think we've had assets in the Houston market that have done really well thus far. Kansas City as well. We've had
Okay.
a few assets that have done very well. My wife and I are in a couple opportunities there where that particular sponsor has outperformed performa, and we're going to get sort of our capital back much sooner than expected, which is always great. So we're looking at bringing friends and family into another opportunity now with them as well. And so I would say those have done typically pretty well. We have a couple in Washington State that were hotel to multifamily conversions that are doing well. And then we have a couple of ground up construction projects in San Diego. So those are a couple of years away still from full completion, but on track so far. So we're excited.
Yeah. Yes. I mean, some of the places you mentioned, it's funny. Um, California is, of course, a very large state. I think it's the largest state, actually, um, population wise. But San Diego, Central Valley, they're different. Most of the coastal cities, LA up to San Francisco, it's different economically, politically, every other way. But there are some still places that are really nice to be in and nice to build in. Hopefully that'll last. In Washington State too, it's one of the fastest growing states right now. Surprising.
Yeah,
But
absolutely.
states that are not fast growing are like New York State. I feel bad for. I don't know what's going on there, but people are. I mean, we could see it because our team. We're in 38 states. Or we have a team that's representing over 60 MSAs right now in 38 states, and we track county by county and state by state the movement of money and the movement of people. And for a while there, California was losing people and money hand over fist, and now New York is pacing with them. People are leaving in droves.
Yeah.
And what's funny, they're not just going to Florida and Tennessee, which has been the big thing the last generation. And I'm going to let the cat out of the bag. People are going to shoot me if I keep telling them these secrets. It's not secret, but like Alabama and Arkansas, I'm telling you, there's movement, a lot of movement going on there, early adapter type movement, and a little bit in South Carolina. But the South Carolina property taxes are higher on average than like neighboring states like Georgia or North Carolina. But Arkansas, Alabama, I mean, Alabama is like Huntsville. I mean, there's a massive presence there for rocket development. I used to work at NASA, that's why I knew that. And then university development out along the coast, major highways are being built, development. I mean, it's fun to watch.
Yeah,
Um,
yeah. I think some of the Northwest Arkansas stuff, like you're mentioning, from the
mhm,
Waltons and things like that, is tremendous infrastructure and sort of building going on. It's supposed to be the best mountain biking in the world out
yeah.
there. And so, yeah, that's been great. And I think to your point, Phoenix also fifth largest sort of
Mhm,
MSA in the country, and we've done
mhm.
some multifamily projects in Phoenix that have done really well and going well right now. And a lot of our land is in the Phoenix MSA that we're rezoning to.
Yeah. Yeah. Phoenix, the thing that's really good about Phoenix is if you look at a satellite view of the US and you look at Phoenix, it's almost like they've got infinite growth potential. They may just keep going
Yeah.
as long as they can get the water, however they get water. But it's not like LA. I mean, there's nowhere to go in LA. LA County is 10 million people,
Yeah.
just the county itself. And there's not a road you can build anywhere out there that's going to put you out of traffic. It's getting from LA to San Bernardino. You're looking
Mhm.
at a 2.5, 3 hour drive. You wouldn't know that, but looking at a map, it is just a constant parking lot.
No,
Phoenix,
it's so true.
man, once you get outside the city, you're home free.
Yeah,
Um,
very true.
yeah. Hey, let's talk about strategy a little bit. So when you're buying now, are you looking more for value add? The old methodology when you're buying, individually was the Burr method: buy, remodel, rent, refinance. But on the bigger properties, we don't call it that, although it's a lot of times we're definitely raising the rents. But do you have a favorite strategy now that you're using for acquisition?
Yeah, so I think a lot of the folks that we work with are still doing some of the value add. Many have switched to sort of a core plus model where really, it's newer vintage buildings. There's not a ton of capex. There's not a whole lot of value add, to push, and it really comes down to a lot of just really thoughtful vertical management. And decreasing expenses and sort of streamlining that. A lot of these operators tend to be mom and pop operators that have been running it for decades maybe, and you come in and then you're able to sort of streamline a lot of those operations. And
Mhm.
so definitely a little bit more of the core plus model that we're seeing that's tended to favor some of the sort of compression of cap rates and things like that we're seeing in certain markets,
Yeah.
where especially with tariffs and the amount of sort of supply chain, where it's definitely getting better, but it's still not as good as it once was, and so a lot of the value add opportunities are much more expensive now than they had been.
Yeah.
So sort of increasing your NOI by decreasing the expense side of the equation is really helping
Mhm.
a lot too.
Yeah. Yeah. Cost segregation. I mean, the bigger property you get, the more important that is to any strategy. And in fact, I know Reach that it's gotten to the point where their strategy is almost solely based on cost segregation. They'll just buy a property and almost forcefully raise the rents, but they'll use cost segregation, extract all of that, and you just turn around and resell it. So the whole period is maybe 3 to 5 years max. But it works for them. I like to hold things longer. I'm sort of like Warren Buffett in real estate. I look for the value. buy quality properties, because over time, guys, they're going to go up more. They're going to appreciate more. And as you grow older in your investing years, early on, you're generally looking for cash flow. Most of us start off, I need more cash flow. But as you age in your investing career, you realize having appreciation is can be more valuable, because you have more leverage power. You can borrow against it. You can repurpose it. You can do all kinds of things. Um, so I do agree with you. Getting the better properties, I think, is a better long-term strategy overall. I mean, if you could have 10 years of almost no capital expenditures. I mean, that's a huge deal in today's market, where
Yeah.
everything, steel, concrete, labor costs, everything's just gone through the roof. So if you eliminate that, you're going to be in pretty good shape. Hey, and if you were speaking with someone now, maybe a real estate agent who represents dentists, because maybe their spouse is a dentist, for example, and they're looking to get into investing, but they don't really have a lot of time, and they can work with someone like you on a joint venture or syndication. Any advice you could give them, or where's a good place for them to start? Mm.
Yeah, I think if it's specifically agents that are working with dentists, I would say dentists are fantastic. The number one congratulations is just choosing dentistry. I think it's funny. My son just got into dental school. He'll be going to the University of Maryland in the fall. So I'm super excited for him. But I think it's so funny having gone through medical school education. There's no financial training. We
Yeah.
sort of come out financially destitute, in a lot of ways, and really open, as prey. And so we know that there's high income potential, and we'll eventually get there. Real estate agents, insurance brokers, financial advisors, they sort of that's where our financial education comes from.
Mhm.
And it should be coming from really great sort of fiduciary like places, folks that don't have necessarily anything to earn from that. And so I think the education that dentists are getting is phenomenal. 80% of them are, sort of entrepreneurs, if you will, and not employed,
Yeah.
whereas 80% of physicians are these days employed and not solo practitioners.
Right.
But I think really having those conversations and finding somebody you trust and you can get to know and understands what it is that you're looking for, because so many of these opportunities, some offer tax breaks. Some offer, high multiples of your initial equity. Others offer monthly cash flow, which could be important to folks. Some offer depreciation benefits, which for folks that do have rental income, like for example, my wife and I haven't paid any taxes on rental income in 6 years since we've been doing the
Yeah.
passive investing, because you get these negative K1 sort of losses on paper that help you wash away your rental income, so that essentially becomes tax free. So there's a lot of different strategies,
Mhm.
depending on what it is that they need. But yeah,
Yeah.
I think it's a terrific market for folks who want to learn.
Yeah. So if they want to participate financially, but not devote time and energy to it, are there projects that you work on yourself, or have that maybe some active ones that you're looking to bring people in on? I mean, what's how do they how do they get a hold of you? I know you have a website, s- the syndicationdoctor.com, is that right?
Yeah. Yeah, the
Excellent.
syndicationdoctor.com. Yeah, so
Okay.
that'll have a list of open opportunities and stuff. But I also do a newsletter, which they can go on there and subscribe to the newsletter. But that's more educational. It just comes out monthly. If we have open opportunities that we're looking at, we'll typically put things in there, and potentially who they might appeal to, and sort of what benefit they would hold. And our our biggest thing is, we bring enough capital into these opportunities where it makes sense for all of us to do better, in the long run. So all of us are able to come in and we benefit better than, the investors that would go directly to these opportunities, because we're bringing in such large amounts. We'll have higher equity splits, we'll have higher pref returns, lower minimums. Just sort of depends on the opportunity, what we're able to negotiate with how much capital we bring in.
Yeah.
But yeah, the syndicationdoctor.com. And then on the newsletter, for those who are doing this, we have a LP tracker, which tracks all of your sort of investments, calculates your equity multiples, your IRRs, and those kind of things, so you can see how each investment is performing over time.
That's nice. That's a great feature. Is there a, are you able to give an example, like a, not an actual address or anything like that, but an example of one of the, maybe an investment from last year or a recent one, maybe one you've already um, uh, uh, sold. You got into it 5 years ago and you did everything you want to do and get out of it. Like a rough idea of, percentages, numbers, what it takes to get in, you know, and not, and for everybody listening, this is not a test. Maybe every deal is different. We're just talking about averages here and basic strategies and philosophies. You have to check out each individual opportunity on its own merit. But anything you can give people as a guidepost, what it looks like, so they can compare to buying their own properties on their own, like we used to do.
Yeah, no, absolutely. I think and some of these opportunities are really great sort of equity multipliers to give you a leg up on being able to kind of grow your own active portfolio. And so one of the ones we did with one of our sponsors was a land deal. And they typically are 3 to 5 year holds. This one ended up being 2 years and 3 months, so significantly shorter. And it was over a 3x equity multiple for investors, which is great. It was a 2,000 acre parcel, again, Arizona, sold to the largest data center that's going to be in the US. So again, 2,000 acre, very large parcel. And your average, that was 100,000 minimum. We do lower ones now, 50, 75 sometimes, but that was a higher minimum. But 100,000 investor essentially made 320 was sort of their and that was in 2 years and 3 months. And so
Yeah.
it's that's considered, they're not all like that. And obviously past performance doesn't dictate future performance, but it's a great track record, and those deals have done typically very well. But
Yeah.
that's a huge increase in that initial capital
Oh
very
my
quickly.
gosh.
Yeah.
Yeah, absolutely. So guys, there you go. This is not theory. This is practice, and people, we do it all day, every day, all year round. And I feel good about our prospects going forward. I mean, we've got a new Fed chairman coming in. The Fed's telling us there are going to be 4 rate cuts this year, not just 2. So this is my opinion. So, but we believe new construction is going to take off this year in many parts of the country. So be prepared for that. But investing never goes out of style. So there's always a strategy. I don't care if the market goes up or down. We just want to know what way it's going so we can choose the right strategy. And, it just comes with time and experience. And the way you get that is by, associating with people like Chirag. Okay. So just remember the syndicationdoctor.com. There's a newsletter you can register to get there. And then it has an investment tracker for you to use. So, I mean, you can't go wrong. That's how you gain experience. Just practice for a while, look at opportunities, look at the tracker, and then when you feel like you're comfortable, that's when you jump in. Okay. There's lots of good people out there, um, like Dr. Chaudhary. Okay. Just keep that in mind. Go to the website and check it out. I highly recommend it. In the meantime, take care of yourselves. And Doctor, I just want to thank you again for taking your precious time to do this. I'm gathering you're a pretty busy person, and this has been a great blessing for us to have you on today.
I really appreciate that, Gary. Thanks for having me on. I really appreciate our conversation.
Yeah, I love these. They're fun. I don't have to have notes or anything because it's just natural. So a lot easier. And for you guys listening, or if you're watching a recording, the video recording, remember you can go to globalinvestoragent.com and click on the podcast page there to get recordings and show notes and things like that. And it's also in 30 different channels. So you're going to find us anywhere and everywhere you look. We do appreciate your paying attention and watching and following. We just hit a benchmark recently. I forget what it was, but I got a really nice email saying congratulations, you hit whatever level it was. I don't even remember, diamond or platinum or something, but it feels good to be there. It's because of you, the listeners, and we love your reviews, guys. Your reviews really help a lot. We don't, Dr. Chaudhary and I, we're not getting paid for this. This is community service, and plus we get to meet each other. So he and I will likely do something in the future. So it's a pleasure for me, and I hope it's a pleasure for you too. And if it is, please leave a review. And we will see you then on the next Massive Passive Cash Flow podcast.
Thanks for for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.